right, so today I want to share with you how I generate trading ideas and how I then take these trading ideas and go from idea to trading strategy. So let's get started. Whenever I develop a new trading strategy or I'm thinking about a trading strategy, for me, it is a 4-step approach that I'm using here. First, I come up with an idea. I come up with a trading idea where I said, you know what? This might actually work. Then, of course, I have to test this idea and see, is this idea making sense at all? And I'm going to show you exactly how I test a trading idea. Step number 3, this is where now I need to have the exact rules. So once I come up with a rough idea, I start trading it with a really small size. So usually just a few shares, or here, what I'm working on right now is another option trading strategy. And actually, you inspired me to this strategy. So this is what I want to share with you today that I'm working on. Anyhow, at some point, the idea, I like to put it into very clear-cut rules so that I know exactly what to do so that this actually turns really from an idea into a strategy. And then step number 4, I like to develop tools around this because tools make my life as a trader easier. Now, you already know that I have several tools. For example, for the selling put options class or this strategy, that's where I have my put options calculator. For the PowerX strategy, I have the PowerX optimizer. So tools make it easier for me to help me making trading decisions. All right. So now let's talk about the trading idea that I have. And I'm jumping back here. As you know, recently I have been doing really well selling put options. This is where in 5 weeks I was able to grow a small account, $25,000 account, by 43%. So it grew into $36,000. I had 16 or 17 winning trades in a row. Right now, I might have a losing trade. We'll see how this ends. Anyhow, completely different subject. So I kind of started to like the idea of selling options. Now, when selling options, as we know, what we need is we need to have volatility. The volatility needs to be high. Why? When volatility is high, this is when we can get a lot of premium in options. So as I'm recording it, we are still in crazy market conditions. The VIX has been high, but right now the VIX is coming down. So this is where I was wondering, okay, where else do we have high volatility? And here's what came to mind. This is where I thought volatility is usually high for stocks around earnings, right? Because as you know, when a stock is ready to announce earnings, there's some uncertainty. And uncertainty always leads to higher volatility. So I thought, that might actually be a good idea. And then I thought recently I did really do well with selling puts. So how about that around earnings, when volatility is high, we do not only sell puts, but we sell calls and puts. And I know that many of you have been asking me around this and have said, okay, can we also sell calls? Because you have been enjoying watching me or maybe doing it yourself, selling puts. So this was the question here. And I thought, yeah, you know what? We could do this. Actually, when you sell calls and puts on the same stock, this is what we're calling trading strangle. Okay, so this is the idea that I'm trading strangles around earnings. Why? Let's just continue this trading idea that you have a little bit of a background, and then we jump onto my trading platform and I show you what I've already been doing and what I'm planning to do going forward. How I go from, as we see here, idea to test to rules that we have a really specific strategy, and then how I develop the tools. Let's go back to the trading idea. Let's say it is selling strangles, so selling calls and puts around earnings. So the idea is that before a company announces earnings, uncertainty is high, and since uncertainty is high, volatility is high. And then right after earnings, we should see a volatility crash, because now people know what a company came out with, and Sometimes there's a reaction to it, but more often than not, there's not a reaction to it. And I will show you how I found this out. I was surprised. So often there's no major reaction after earnings. So we want to take advantage of that. So this is the idea. And this is where I thought, okay, who is actually buying options right before earnings? Well, this would be often institutions who want to hedge, who want to make sure that they are not getting caught on the wrong side of earnings. Okay, so let me ask you, thus far, just the general idea, is this making sense? If this is making sense thus far, do me a favor and give me a quick thumbs up so that I know that you're still with me, because I know that I'm going fairly quickly here. This is why I'll probably do more than one video. I don't want to stretch this out. I could probably talk about the same topic here for 2 hours, but I want to make sure that I'm going also at a fast pace. So if I'm going at the right pace, do me a favor, click the like button really quick if this general idea that I have here thus far is making sense. And then we go into how I'm testing the idea. Because again, step number one is having an idea. And this is my crazy idea because I love selling options when the volatility is high. So I believe that this might be a good idea. And maybe it is not. We're going to find this out together. What do you say about this? We do this together. I want to show you exactly how I do this. So step number two, now we need to go to testing. So what I'm doing right now is I'm sharing my trading account because this week there were 3 companies that reported earnings: Starbucks, UPS, and Caterpillar. I actually sold a strangle, just one. I told you, when testing, I'm going with a super small, the smallest contract size ever. But I don't think that you can really do a whole lot of testing on the computer. So especially with options, super difficult to back test options. This is why I put on a few trades. And as you can see right now on these 3 trades, I'm up $185. I put these trades on Monday. Today, as I'm recording it, it's Wednesday. So in only 3 days, I made $185. Now you might say, that's nothing. But you see, this is the margin that I needed for this. The money that I needed was $5,400. So if you do the math, that is 3% in 3 days. That's 1% a day. If I could keep that up, making 1% a day, that would be more than 200% in a year. So you would more than double your account in a year. I like that idea. Let me actually show you exactly what I'm doing, what my idea is. Again, today we're just going in broad strokes so that you get the general idea. And then probably in the next video, we're going to refine that idea. So I want to actually pick a few stocks that are reporting earnings in the next few days. So one of the stocks that is reporting earnings in the next few days is United Airlines. So United Airlines, as you can see, oh my gosh, they are reporting earnings tomorrow. So I believe that today there's some pretty high volatility and that this volatility gets sucked out of it tomorrow. So let's take a look at United Airlines. And here's what I'm looking for. I'm opening up my option window. And the deal is I don't want to be in this trade for long. So since they're reporting earnings tomorrow, I'm actually fine choosing expiration where we expire in only 2 days from now. Now, by the way, keep in mind that right now I'm just showing you the idea. I don't have the specific rules yet, but here's my idea. It is right now trading at $31. So the idea is that I'm selling deep out of the money puts and calls. So here, for example, with a delta of 0.67, so that's a 90% probability of success. Can actually go to 27. That's more than a 10-15% move. Let's try this. Let's just see if we could get enough premium here. I would try to sell this one. And again, right now, I don't have the exact rules yet. I don't have the exact rules, but I will at some point after I'm testing that the idea is valid, have the idea. I have the rules. So, and I want to sell a call above current strike price. And I'm looking here for a delta of, that actually might make sense. So maybe 37. Let's see, what do we have here? Maybe this one, 36, does look good. So let's do this. No, I actually wanted to go to a strategy build out. Let me do this one more time. And again, as you can see, you're right now looking over my shoulder. So as you can see, this is not scripted, but I'm showing you exactly what I would be looking at. So I would sell sell this one, 36 probably, and then also looking here at the delta, maybe selling a 27. Okay, let's just see. So the 36 and the 27, let's just go back to this here, and let's mark this on the chart and talk about where exactly would this be. So we talked about 36 right here and 27. The idea here is that if United is reporting earnings tomorrow, that they stay for the next 2 days in this range. So is this possible? Well, let's just ask one of our tools, and one of the tools is built into your trading platform, whatever trading platform you use there. It is possible to generate a profile. So it shows me a risk profile where I'm selling a call and I'm selling a put, and you see I would make $56 in 2 days. So tomorrow, if it stays right in between there, and the probability of success is 80%. There's an 80% probability that the strategy will result in a profit. That does not sound too bad, because you see, for one contract, the margin impact is only 368%. So this means that I can make here in 2 days 10% based on my margin. Wow, that's pretty sweet. Seems that we could be even less aggressive and choose strike prices a little bit out of the money here. But you see, this is the general idea. I want to show you another example that I looked at. Would you like to see another example? If you would like to see another example, do me a favor and right now just click on like really quick. Then I'll be happy to show you a second example so that you see what I'm looking at. I'm looking at super high probability trades, and I'll bring up a second example. So do me a favor, click on like right now if you're enjoying this. Okay, let's actually take a look at another stock that is reporting earnings pretty soon. So there's a stock called Qualcomm. So Qualcomm are reporting earnings, even today. All right, good. It seems that today after the bell, Qualcomm is reporting earnings. Good. Let's see what we could do here with Qualcomm. And again, all we want to see is there a possibility to make some money over the next 2 days? So same here, I see that I have options that expire in just 2 days from now, and they're reporting earnings this afternoon. So the idea is that they're staying within a certain range within the next 2 days. I mean, is it risky? I don't think so, because if you look at Qualcomm, here it was jumping from 73 to 71, not a whole lot. Before this, during earnings, they were jumping 5% up, but then they stayed here. So they were not running away like Google, for example, with 10%. And here are earnings. You see, this were the last earnings. We pretty much the next day were right there. Okay, so here the idea is that probably also when they report earnings after the bell, that they won't jump a whole lot. So let's see what we can get here for Qualcomm. And right now they're trading at 78. So I'm looking for a strike price below. Let's just say if we could go with 72. So this would be $6. That's almost a 10% move. It's like an 8% move. Now we can even be less aggressive. Let's do 71. So 71, we go, okay, we try to do this. And with the 71, we can probably get 70 cents. And let's also go to the upside, $6. So we would go to the 85. So let's do this here. And again, I want to show you the risk profile. I think as I'm recording this, the markets are closing. So this is why it doesn't show it right now. Let me see if I can quickly hit refresh. So I'm recording this going into the close. Probably doesn't show it here. But again, the margin impact here is $1,000. And I would probably get on this one, let's see, we had 50 cents. So not as good as the previous example. Now, if you look at 71 and 85, so here is what could happen to Qualcomm in the next 2 days. We go up to 85 and 71. So if Qualcomm would stay within this range over the next 2 days, we can collect $50. In 2 days. And again, this is where I would trade size. I would probably trade 20 so that I can collect $1,000 in 2 days. And I don't know about you, but this sounds pretty sweet. So take a look at this chart. Is it likely that Qualcomm might stay within these 71 and 85 over the next 2 days? I believe that this is very possible. So we will follow up more on this, but basically what I wanted to show you right now in this first video. So this is only the first, probably out of 2 or 3 videos that I do around this. So right now I wanted to show you how I go from an idea over testing the ideas to the rules. So please, right now, when you write a comment, don't ask me, okay, what are the rules? They're not there yet. I haven't developed them. I'm just sharing right now a trading idea, and the trading idea is based on selling options. So this is the idea here that right before earnings, volatility is high because uncertainty is high, and that after earnings, volatility plunges. And again, this is where you have seen I was able over the last 3 days to make 3% based on an account which is not a margin account, just a regular account. With margin, it would probably be, I don't know, 2 or 3% a day, which is amazing, right? So we are right now here at the idea, and I'm still in the testing phase. And if you're enjoying this video and would like to follow what happens, I will do some more testing here over the next few days. We can probably put some trades on together so that you see I'm doing it with super small size so that you see how this works out. And honestly, I want to see that I actually catch a trade where I'm getting in trouble so that I can refine the rules and that I can also develop the tool. So if you enjoyed this video and you would like to see other videos, click on subscribe here and hit the little notification bell. This way you get notified whenever I release a new video. And there's probably a few videos popping up on the screen right now. If you want to continue watching videos, just click on any of these videos that make the most sense to you. All right. Hope this helps, and I'll see you in the next video.